The A. I just predicted something wild for XRP. A sharp drop, followed by an explosive 45% rally to $2. Let's break it down. Here's where we are right now. XRP is sitting at $1.3753, up a modest 0.50% today. You know what I've noticed? It's been hugging that lower Bollinger Band at $1.3464, like it's testing the waters before making its next big move. The volume is healthy at almost 70 million XRP traded, so there's definitely interest here. Now this is interesting. The technicals are painting a mixed picture. The RSI at 44.88 is sitting pretty neutral, not screaming oversold or overbought. But here's the thing. The MACD is still bearish at minus 0.0029, and we're trading about 19% below that crucial 200-day moving average at $1.6973. That's a pretty big gap to fill. Well, globally speaking, there's some interesting stuff happening. Iran peace prospects are actually boosting Bitcoin, and you know how that trickles down to altcoins. Plus, Nvidia earnings have everyone looking at crypto again. Here's what's cool though. XRP has a negative correlation with the dollar index. So when the dollar weakens, XRP tends to benefit. On the regulatory front, the Clarity Act is reshaping things, and Washington is moving toward new crypto frameworks. Now, XRP ETFs are experiencing outflows right now, which is concerning short term. But if this passes and we see institutional money flow back in, that breakout above $1.50 could happen fast. The mood right now is, well, pretty scared, honestly. The Fear and Greed Index is at 27, which means extreme fear. XRP search trends are super low at just 15. You know what I always say though? When everyone's fearful, that's often when opportunities appear. Don't worry, these extreme sentiment readings usually don't last forever. The big players are doing something interesting. Whale transactions totaled over 1.5 billion XRP, and here's the kicker. XRP deposits on Bybit dropped to nearly zero in May. This suggests that selling pressure from April is finally easing up. That's actually a pretty bullish sign for what's coming next. In plain English, we're at a crossroads here. The Elliott Wave suggests we're in a correction phase, while Wyckoff analysis puts us in an accumulation stage. So basically, smart money might be quietly building positions, while retail is still scared. We've got strong support between $1.31 and $1.36, with resistance at $1.47. So what is the A, I think? This is where it gets really interesting. Short term, it's predicting a drop to $1.2912. That's about 6% down with 81% probability. But wait, here's the exciting part. Medium term, 7 days out, it's forecasting $2.0044. That's a massive 45% jump with 63% upward probability. Long term at 30 days, we're looking at $1.5864. Still a solid 15% gain. But here's what could go wrong. Those XRP ETF outflows are still happening, and that extreme fear could push us lower before we bounce. The 19% gap from the 200-day average is pretty significant, and those short-term AI predictions show heavy downside pressure initially. Here's my take. I'm recommending a watch and wait, then selective buy strategy. The setup is actually quite promising once we work through the short-term weakness. Entry points: primary at $1.29, secondary at $1.25, stop loss at $1.20 to protect downside. First target, $1.58. Second target, that juicy $2 level the AI is pointing to. This could be one of those situations where patience really pays off. That's it for today. The AI is painting a wild ride ahead for XRP holders. If this analysis helped you see the bigger picture, hit that like button and subscribe for more market insights. See you next time.